Hi, this is Amy with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 8th of August. Starting off with the FTSE 100, where depending on where the line actually is, 7,500 looks like the barrier to further rallies. That's basically a line of resistance from April. An end-of-day close above that. We're pretty close to that now. I've been trying for the last few days. Could take the market up to 76.50, which is post-February resistance. Above that, the unlikely prospect of a new move to record highs, which would be 8,000 or 8,100 at the top of that rising two-year trend channel. And as I said, I think earlier this week, the idea that inflation gives companies pricing power, which they haven't had for a couple of decades, is the potential driver for a new move to the higher levels, but let's see whether that actually works out. But at the moment, we're between, basically hitting resistance around 7,500, between here and the 200-day moving average at 73.74, and really that's the initial stop loss on for the longs. Still waiting for that falling 50-day moving average to flip around. If that does, then we'd be in the run-up to a golden cross, so we should know that within a few sessions. On to Bitcoin, where we're not quite at such dizzy heights. In fact, almost rather the opposite at the moment. Here we've had the market get stuck really just below the old May support there. That was around 25,400, and recent weeks have seen this market basically dither around the 24,500 area. So old support becoming new resistance. Really want to see an end-of-day close back above the 25,000 area. A bit of a scare today with that little spike down towards 21,000, but that actually has given us a hammer candle, and we still have that rising 50-day moving average. So that could be a little clean out before a new move to the upside. And obviously that could be wishful thinking. This stage, though, above the 50-day moving average, around 21,700, we could head up to a best case scenario target, which would be the top of that November falling trend channel around 28,000. On the downside, below the 50-day line, then would target around 19,000, which is basically post-July support for this market. Moving on to the stocks, and as I say, one of the better rules of the stock market is to follow stocks where the share price has gone up after a fundraise, and that's what's happened with Alchemy. So they raised, I think, 1.2 million pounds last week. We had an unfilled gap to the upside, which is one of our favourite setups off the lows. Then recovered the 50-day line, and now we're actually above the 200-day moving average at 118. Said previously that above the floor of that channel there, around 90 pence, we could, in theory, head back up to 210 pence, the top of that rising trend channel from November. Seemed to be rather optimistic, but now looks achievable, maybe as soon as the end of next month. Stop loss, if you think that the 200-day line's too tight, which it probably is, would be then back at the 50-day moving average at 102. And while we're above that, looking pretty healthy. But the main thing here really is that unfilled gap to the upside, and holding that and then building on that. So let's see how Alchemy does over the next few weeks. One of the sort of head-scratching situations at the moment is Angus Energy, where we've had all the good news and we've had all the gas price hikes and everything else, and the shares still really in consolidation mode, haven't really gone anywhere since April. The punchy call here is that after all that consolidation, it could be time for the long-awaited breakout. So breaking that line of resistance from last month, that's around 1.3 pence. Above that, on a weekly close basis, probably looking for 1.8, which is the top of that rising late October trend channel. 1.8 pence perhaps by the end of next month. And the upside valid while we hold above that rising 50-day moving average at 1.25. That fact that that is rising, we bounced off that quite well, as is the 200-day line, does suggest that a breakout is now finally imminent. Stock which has been rather frustrating over the recent past has been East Imperial, but looks as though it's gingerly emerging from a bear trend that it's been in place for basically since last September. If we look at the detail there, we see that the shares broke that resistance line there from last month, around 2.4 pence, the beginning of this month, and we've had generally positive candles ever since, today being no exception. View is that above the 50-day moving average, around 2.5 pence, we could see at least an intermediate rally towards the 5.8, 5.9 area, which was support for this market on the way down. Best case scenario, I suppose, at the moment is to get to 8 pence by the end of next month, and that's the area of the 200-day moving average. On to a stock which has delivered the goods, at least in the near term, with the Galileo Resources. Here we've had another of those situations, a bit like Alchemy, where the shares gapped off the low, held the gap, and then have built since then. Looking now towards, well, we've got the 50-day moving average already rising. We can see the 200-day line rising. Then we're heading for a golden cross, and that would suggest that we'll get more than 1.35 pence as the upside, 1.35 being basically year highs for the shares. If you're a fan of the shares and looking for a more ambitious target, then that would probably be according to the line I'm about to draw now, which is a resistance line projection from back in November, and that's heading towards 1.8 pence. And I suppose at the current rate of progress, we might see that by the end of next month. This stage only well below the 200-day line, currently at a penny, really delaying the upside scenario for Galileo. Did say a couple of days ago that news from Hemogenics seemed to be overdue. We already spotted the break of the trend line there from back in October around the 1.4 pence level. At that time, the upside was potentially up to 2 pence, which is a February resistance line projection, and we're making good progress towards that. There was a bit of bullish divergence in the RSI window as well to give us the hint that the shares were on the move. So it looks like 2 pence could be hit by the end of this month, especially while we hold above the 200-day moving average at 1.55 pence. On to LoopUp, and here the chart looking quite encouraging, I suppose. We've had the shares bottoming out for quite a while, and we just had that final bear trap there just around the 5.25 pence level at the beginning of this month, so getting rid of the last of the sellers, hopefully, and since then you can see all those positive candles. We've got bullish divergence in the RSI window as well. That means we're looking for not only the shares to fill that gap up to 7.8 pence, but possibly a little more, the neckline resistance there from post-May up to 8.5. So 8.5 looks as though it should be easily achieved by the end of this month. Best case scenario target, if you're a fan of the shares, up to 12 pence by the end of next month, which is the area of the 200-day moving average. Upside value while we hold above the 50-day line at 6.25. On to Piri, where investors decided that why take 8 pence a share when you can have 3.9? So that's what we've got at the moment. But just the first sign of a recovery here. So the bullish divergence with the last lower low there, just below 4 pence and a higher RSI trace. That suggests that we're going to break out to the upside, at least an intermediate recovery. End of day close above, let's call it 4 pence really, could take us up to the 4.5 pence area initially with the 50-day moving average. Best case scenario, maybe by the end of this month, is up to 5.25 at the top of that falling trend channel from back in April. But let's see if the bullish divergence indicator there comes up with the goods and gives us a reasonable move. And obviously we don't want to see any fresh lows ahead of a trend line break there. Moving on to Faros, and here a stock which is trying to re-establish itself. We've got a trend line break, which we had yesterday, broke above the 50-day moving average as well. So above 22.5 pence, looking for, I suppose, back up to the 28 pence area, which is post-May resistance for the shares. Nice inverted head and shoulders type move there as well. So the neckline around 23 pence, and given the depth of the distance from the neckline to the lows, around 4 to 5p, 28 pence looks as though it should be on the cards while we're above the 22 pence area. On to another relatively obscure stock, Pelatro. Here it looks as though we're just about to break that line of resistance there, and the top of that, the narrowing triangle, or falling wedge in other words. End of day close through 25 pence should be enough to get the shares up to the initial 2022 resistance as high as 35 pence. We've also got an island reversal there, so we gapped down there in July and gapped up so far in August. So it looks as though the situation is ready for a little bit of a bump to the upside. Onto a stock which I haven't looked at for quite some time, Savannah Resources. Here we've broken recent neckline resistance around 3.2 pence, and above that looking for at least the January resistance line there at 4.25. The main thing, I suppose, here is that we've spent the last 2 days closed above that, to the top of that gap down that we had last month. So gap close buy signal, as well as the break of the 50-day line, should be enough to get the shares up to at least 4.25 and break the recent downtrend. Moving along to XL Media, which has already broken its resistance line a while back, so at the end of last month. We've got a rising 50-day moving average. We've got a U-shaped bull flag there as well, and we've broken through the top of that, and the 200-day moving average. That suggests that above 35 pence in the 200-day line, we could head up to the top of that rising trend channel from January at 45 pence by the end of next month. And upside of that, while we hold above 31 pence, which is the rising 50-day moving average position at the moment. Finishing off with Xeros, which has bullish divergence and just popped up today. That gives us some encouragement that the shares could have enough momentum to deliver decent upside, at least a retest of the top of that broadening triangle from back in April by the end of next month. Be cautious, maybe wait for an end-of-day close above the 50-day line, because we haven't been up above there since the beginning of last month, but I think there's enough has been done there with the bullish divergence and that sideways shuffle along the lows to give us 60 pence by the end of next month, while we're above 30 pence, of course. That's it for me today. More updates tomorrow.